Hey everyone! Today, let's dive into a pivotal moment in tech history, the dot-com crash of the early 2000s. This was a time that shaped the internet as we know it today, and there are plenty of lessons we can still learn from it. So, what really happened? It all began in the late 90s, during an era of rapid technological advancement and unprecedented growth in internet businesses. Investors were wildly optimistic about the potential of the internet, and this led to a massive surge in investments in tech companies. Essentially, if you had a business plan and the word .com in your company name, you could expect to attract some serious capital. But here's the catch. A lot of these companies had minimal viable products or none at all. They were burning through cash, focusing more on increasing their user base rather than a sustainable business model. The mantra was simple: grow fast, worry about profits later. This led to what we know as the dot-com bubble. By the year 2000, reality started to bite. The Nasdaq, which is heavily weighted towards tech companies, peaked in March and then took a steep dive. Trillions of dollars in market value were wiped out almost overnight. Companies that once had sky-high valuations folded, leading to massive job losses and economic distress. So, why did the bubble burst? Several factors contributed. The Federal Reserve increased interest rates, there was a general realization that many dot-coms couldn't turn a profit, and critically, the market was saturated with too many similar companies. However, it wasn't all doom and gloom. This crash was a necessary evil that cleared the speculative froth and paved the way for sustainable growth. It taught investors and companies alike the importance of fundamentals like revenue and profit, not just user acquisition. Fast forward to today, and we see the survivors of the crash, giants like Amazon and Google, not just surviving, but thriving, because they had viable business models and were quick to adapt. The dot-com crash is a cautionary tale about the hype and the reality of tech investments. It's a reminder that while innovation is critical, sustainable growth is what ultimately leads to long-term success. Thanks for tuning in, and remember, in the world of technology, it's not just about moving fast, it's also about moving smart. See you in the next video.